She was rejected by the judges just moments after she started her performance, not letting her even finish, but she refused to give up and shocked them instead with a masterpiece. She was rejected.
Muhammad Ali? You're Muhammad Ali? Really? Son of Muhammad Ali in my store?
It looks like this man is the real son of the legend Muhammad Ali, although Seth is skeptical about it. Anyway, he offers a robe and boxing gloves to his father. He also offers his birth certificate, which Les is happy to see.
So your dad gave this as a gift to somebody. So this is the one you...
The robe that he pictured.
So how much did you want for this?
$2,500. It is important to know that everything seems correct, but there is no clear evidence that it really is Muhammad Ali's robe.
What would you really take for this? 700. If he signed it and you had a picture of him signing it, way cool. If we're going to make a deal right now, you can't go a penny less than...
Take $600.
$400.
Although Les's offer seems small at first glance, in his eyes it is fair. It looks like Muhammad Ali.
BTC has been crazy since yesterday, and yeah, I might still look for more buys. It just depends on what I'm seeing today, but currently I don't think I want to be looking for anything. Alright, because okay, this particular trade was almost about hitting take profit yesterday, but woke up this morning and so it was back to break even. On Euro USD has been since yesterday. So here's what happened yesterday, or instead the day before yesterday. I had a projection on GBP USD, which was this, a trade on GBP USD, which was this, and it went to the point of TP. So I had a point of reversal, right, on GU, but I also had one on EU, you know, mostly because of the fact that they are correlated, and wanted to see if I could catch some reversals on EU yesterday due to the price action of Monday, but I was wrecked, and there were a lot of confluences as to why it's okay, but unfortunately it just wasn't the right fit. So I hit stop loss on this one yesterday, and also on gold. I'll show you the gold trade later on. But yeah, I took like 3 stop losses yesterday. It was a crazy day. Tuesdays are usually one of my most busy days when it comes down to work, streaming and all that. So yeah, so if I was to be asked what exactly I saw on Euro USD yesterday that made me want to take, there were just a lot of things. There was this strong point of interest overlaying I think it was a 2 hours fair value gap, right? And then there was a 4 hours range and there was a 4 hours range respecting this particular. So I was using this particular range, right, as my initial confluence, while on the daily, I was using this particular candle that closed back into this range as my confluence. But like I said, everything aligned, but it just didn't hit, the way it should have. So yeah, although it's looking like it wants to start doing something now, but here's the thing, I don't think I want to take any trades in this, mostly because I haven't seen any major confirmations just yet. But until then, let me delete all this old confluences. They are no longer valid. Let's check gold. I think we should be seeing some trades on gold today. This BTC was looking really nice, I won't lie. Everything seemed to add up, everything seemed to be going in the right direction, but it just did not click. But yeah, gold. So on gold, yesterday was also one of those days where I was following my point of interest, my bias for the week, and it just did not play out. For example, I was using this daily. I think 2 days ago I had a short trade from here also. From somewhere around here. And it was on the 4 hours. So I used the 4 hours order block as my point of interest, but then it just did not play out. So yesterday I was thinking, oh, since it didn't play out and there were just a lot of there was a range here, right? And a lot of indecision candles. And I was like, you know what? Even if I'm not necessarily correct, I can play it out and just run with it and see if there's something I can, bank out of it. Totally avoiding it, totally forgetting that there was well, I wouldn't necessarily say I forgot, but I completely ignored the order block above and used the fair value gap as my initial point of interest. So it took me out completely, found better liquidity above, and it's rallying back down now. So until I see, at least even if it's some sort of break in structure, in market structure, that's when I would start looking for more trades on gold. But for now, I will just avoid it since it's, still in the middle of. You know what? I think I'll completely delete this and focus more on the area it's at now, the zone it's at now. Mostly because the zone it's at now, it's quite strong and it's having a couple of rejections from it now. So on the 4 hours, we are seeing this very huge displacement candle. It's completely engulfed 2 candles, and excuse me, it completely engulfed 2 candles, and that's one of the confluences I would say holds tremendous weight if I am to enter or look for more sales. But typically, like I said, I would want to see at least some sort of break in market structure, either this, or to completely invalidate this order block that we are looking at right here. So it's either one of the two, but anyone it's does first, I'll be looking to. But typically, I would want to see it break this to show that this other block here has been completely invalidated, and I'm not. That's not what I'm waiting for. If it just breaks this, there's a possibility it could do this. It could come, break, right? Retest this particular order block and then fly, which is not what I would want to, be in. I've been looking for sales for how many days now? I think 2 days straight, and I wouldn't necessarily want to be caught up in another bad sell. So it's best I allow markets play out, see what it's doing, and then follow alongside with it. We're trend followers, we're not trend chasers. So yeah, just typically look for some market structure breaks, draw out some new points of interest. The mistake I made yesterday was, I wouldn't necessarily call it a mistake, right? But it was still a mistake in my books. The mistake I made yesterday was not waiting, maybe just a bit, right, for this particular order block. I'm sure the order block was looking really nice and all that, but I wanted to see. I had okay, no, I wanted to say I had like a huge hope on the 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 daily fair value gap that was there previously, and like I said, it just wrecked me completely. So I will totally avoid gold until I see some sort of market structure shifts or some really, really good candle movement, either to the downside or to the upside. But I have a huge conviction that I am not sure gold would want to be buying or for at least a week or two. Last week was quite bearish, and I'm expecting this week to also be bearish. It's just Wednesday, so there's a possibility we could see some huge displacements to the downside, at least covering this weekly open, this week's open, and maybe filling this gap, but we can only hope. Yeah, that being said, let's go to US 100. Mm. I still haven't found a way to do the intro stuff just yet, which is very bad because that's something I need to, be implementing. But I'm new to this whole YouTube shit. You guys should have to bear with me for now until I get everything sorted out. I'm still learning how to do the whole editing so I can be posting, I won't necessarily say short-term content, but short-term in the sense where it's going to be like 20 minutes, 30 minutes at most, of my trade recap. Like I said a couple of days ago, every Monday from now on, we'll be posting a weekly projection, what we're expecting for that week, the things we'll be looking for. So while we are doing our trade recap, we can use the analysis from what we posted on that Monday to show you a guideline of how we used our bias to follow our projections. And yeah, typically just do the main thing. Like I said, I'm still learning editing. I'm still trying to put everything together so this channel could be as lively as possible. Not just lively, as educative as possible, because that's the whole goal of why I created it in the first place, to put education out there free without necessarily having to, people to come to me and say, oh, this or that. Like, you just literally direct it to my channel and you can watch whatever it is you want to learn there. So yeah, on US 30, we are seeing some really huge moves to the upside. Let's start from the weekly, yeah. So last week was a bit bearish, right? But overall, it has been very, very bullish on US 30. Same thing as US 100. Right? Well, not same thing. US 100 has been somewhat in a range. But on US 30, it has been bullish for a while. And then this week, yesterday, we broke structure to the upside, which was this. And then we closed above that structure. Now, not only did we close above that structure, we left a lot of displacements and a lot of confluences below, indicating that price might retest or seek. Indicating that price might come back to retests whenever we make a pullback. So this is our first confluence on the daily. Also, the daily order block is quite significant, but I prefer to start seeing my order blocks from the 4 hours downwards. So let's go down to the 4 hours. So on the 4 hours, we are seeing the last leg, right? The last initial leg that broke structure was this particular leg right here. Right? And that particular leg was the initial leg that caused the huge displacement to the upside, leaving behind a fair value gap just a bit above it. A huge fair value gap, not just a bit, a huge fair value gap, which, like I said, was glaring on the daily fair value, on the daily charts. So that being said, let's go to the 2 hours and see if there's something significant more we can see there. So on the 2 hours charts, there are even more confluences. But if I would post more about premium and discount zones, just so what I'm saying now, a lot of people can understand it, but to avoid going too deep into it, it's just, this is like a visual representation of what I'm talking about. I would prefer to take buys because of this long leg, yeah? It's not just 1 day, it's like 2 days of price action or 3 days of price action like we saw in the daily chart. We saw that for the past 3 days, it has been extremely bullish, right? And this right here was the initial leg that made the bullish run from yesterday. But then this isn't just the only leg we should take account of, because like I said, it's 3 days of price action, consistent price action. So taking account just 1 day and leaving the other 2 days is wrong. So that being said, I wouldn't want to take any trades from here, from the equilibrium, which is the 50% upwards. Why? Because I consider this premium zones that are too expensive for me to want to buy or sell in, depending on the trend, right? Now, anything below this 50 downwards is a sweet spot for me, right? It is where I would initially want to see trades come towards and then start flying out of, or start flying upwards, or start respecting. Now, this particular order block is in a premium zone. Is it good? Yes. Could it be respected? Yes. but would I want to take it? No. And even if I would say, okay, let me risk it and take it, it would not necessarily be a plus, setting for me. And since it's not A plus, I wouldn't necessarily want to risk too much on it. So let's say if I was risking 1%, 3% on an A plus setting, I would risk like 0.5% on that, mostly because it's not at the zones or at the areas where I would feel comfortable taking, trades like that. So yeah, these are the zones. So now that you understand what premium and discount is, let me take this off and use my fib to draw out the leg again. Now, I'm sure most of you are conversant with what the Fibonacci tool is and how to use it. I think I've explained it before to some of my students, but it's more of like a tool that tells you, like I said, premium zones and discount zones, but with much more in-depth details. For example, there's 0.62, which a lot of people consider to be the golden ratio, which a lot of people consider to be the sweet spot to want to enter from the discount zone. It's just calculating from one leg to the other, mostly after a breakup structure. So it's not as complicated as a lot of people try to make it out to be. Oh, Fibonacci this, Fibonacci that. You have to have a set rule. No. It's literally just where is the discount and where is the premium zones. Which areas would I want or prefer to enter at? As ICT would say, optimal trade entries. So you typically want to be looking for trades from the 0.62 below, but I wouldn't necessarily say it's like a set rule. I consider it as a confluence, whereby it's more like, oh, if I am seeing my points of interests in these particular zones, then I think that's where it will be considered good for me. For example, I'm seeing this particular order block that I drew out earlier, just a bit below the 0.62 area. Now, if I am to use all my confluences together, this is something like this, and putting my stop loss just a bit below the 0.75 area is what I would typically be looking for as an optimal trade entry, an A plus setting or an A plus entry, depending on what you want to call it. All in one, it's all literally the same thing. So yeah, on US 30, this is what we are looking at, this is what we're seeing. Let's go down to the 1 hour and 30 and see if we can see. So yeah, 1 hour, same thing, 30 minutes, same thing. So yeah, there isn't much to look out for on US 30. Hopefully maybe by the 9:30 open. I'm not sure it's going to come this low, but you can never tell. You know how price is. Sometimes you can just do whatever it's going to do. But what we'll do to anticipate it is we would wait for, we'll set an alert and just wait for price to do its thing. So yeah. So this is the projection we have on US 30. It looks like a good trade to me. Yeah, let me take a picture of that and send to my group members. Yesterday was an interesting day. I'm not one to stay stuck in the past and keep reliving something that has already happened, but I hit 3 stop losses, which is, I won't say weird because it happens, but it's crazy that well, it's market, it does what it does. But I'm just hoping today doesn't act as yesterday did. So yeah, I have sent that to the group. And let's check other pairs and see what we have there. Oh yeah, GBP AUD. GBP AUD I have been avoiding for almost, let me show you why. Let me go to the weekly. Let's start from the weekly chart. I've been avoiding GBP AUD for almost 2-3 weeks now, mostly because it has had significant rejections from the zone. I think at some point I bought from here upwards, but it then retraced backwards, and it has been like that for almost, that's been bearish for almost 2 weeks now. This week also looks like it's going to be bearish, but it's still reacting from that particular zone that I drew out from a couple of weeks ago. And I hate trading ranging markets. It's just something I find very difficult to do, and I tend to just completely ignore it. I do not like trading ranging markets, especially when I'm seeing the range on the weekly charts. Like, that's something you have to avoid. You have to keep in mind always to ignore trading, except you have a strategy that works in trading markets. My strategies typically work only in trading markets, and I won't say only works, but you know how it is. If you see something that's your bread and butter and you know your onions pretty well, you wouldn't be using it in markets or in situations that don't work or don't work out. So yeah, GBP AUD has been ranging in this zone for a very long time, and me saying it's going to buy or sell is crazy if I do say so myself, mostly because I do not want to be caught up in a manipulation trade. And yeah, like, you can see it. I don't even need to say much about it, but you can see how range bound it is. Taking anything, whether I buy or sell in this particular market right now, is absolutely mental. It looks like shit right now, man. Just completely avoid GBP AUD. But regardless, I will still do an analysis on it. On the daily, it's almost the same thing, man. I don't want to be in this. So yeah, we are avoiding GBP AUD for the time period until it starts doing something meaningful. But for now, I'm not seeing anything meaningful on it, so I completely avoid it. I don't want to even go down to the 30 minutes, 1 hour, 2 hours, mostly because, like I said, it's just going to confuse you. It's best not to force the trade. If you're not seeing it, then you really are not seeing it. Go on to the next one, right? Don't force trades. Do not force entries. Don't force analysis also. So yeah. Now on GBP JPY. GBP JPY. Was this the one we just did? Okay, we did US30. So on GBP JPY, we have, I think I did this yesterday. I did the analysis yesterday, and it was more like, let me start from the weekly. So from 2 weeks back, we started having some rejections, right? Just like gold, GBP JPY had been very, very bullish for a long time. Like, this is 1, 2, 3, 4, 5, 6. almost 8 weeks of price action, right? And it had been bullish. I think throughout last year it was bullish. It was a very bullish year on GBP/JPY, and we started this year somewhere around here, right? And the previous 2 weeks, I think, was extremely bearish indecision candles and that's the reason why there's a range here. I only drew out this range because I wanted to explain to a friend, right? A friend who we trade together from time to time. He said he wanted to look for a buy somewhere around here once it breaks this particular high here. I told him it's a range. It's best to avoid range bound markets because you do not know if it's going to break and then close back into it, which is exactly what it did yesterday, right? Price broke out from the day previous this candle, and then yesterday being Tuesday, price broke back into the range of the day before yesterday's candle. It broke out, but then broke back in the range. So it closed in the range yesterday, meaning possibilities of a reversal are imminent, right? Now, this, in my own opinion, I would have wanted to say, okay, let me start to look for sales. But then, like I said, trading in a range bound market is just not what I would prefer to do. I don't like forcing trades, and it just looks like a lot of forced. It just looks like the force. But you know, even if I am to enter this trade, right? This looks like something I would do. I would say, oh, let me use this range as my initial target. So I would just trade the range, right? Let's go back down into the 4 hours. On GBP/JPY, on the 4 hours chart, it looks, like I said, bearish. This structure was broken, and that structure might just as well be a market structure shift, right? It could just as well be a market structure shift, mostly because of this range, the range that I drew out and was explaining just a minute ago. So this is the range that I'm talking about. So I can, even if I'm to look for anything significant, any biases whatsoever, it would be just a trade within this range, from this red zone to this red zone, just this range, that's all. I wouldn't want to be looking for anything aside from that. And also, there's also this. I like seeing candles with a lot of wicks, right? Within a range. It kind of shows me the amount of indecision that's going on at that moment in time. And like I said, so this isn't just MSS, and MSS is also a CISD on the daily, which is a change in state of delivery, as a lot of you already know. And the change in state of delivery on this particular candle, to me, is a significant sign as to why I would want to enter a sell. And even if I'm to look, so let's go to the 30 minutes and see if we can see an entry that we can possibly take a sell from. So let's check the 1 hour. Okay, so there's this other block that I could consider, which is the leg that broke this particular structure here that caused the CIST. Okay. So yeah, this leg that caused the CISD, 15 minutes. And then yeah, that's it. I don't think I need to go down further. I think the 1 hour says it all. So even if I was to take a trade on GBP JPY, it would be something of this nature. A ratio 3. It's not bad. It's still within the range of the initial range. But yeah, it's not a bad trade. It's just manage your risks well. Or I could target this, right? But like I said, when you're taking trades in a range bound market, it's best to always look for the closest point of interest so as to not overdo it just in case it's going to close back within the range. So yeah, I think that's it on GBP JPY. And yeah, overall, I have a buy bias. My overall bias on GBP JPY is bullish. So there were a couple of weeks ago, there were a lot of liquidity zones that I left behind. This one's being one of them. And I would consider this one strong because if we are to continue the initial or the overall buys, then there's a possibility that, because okay, there's something called A&D, accumulation, manipulation, distribution. So if price was to make or would want to rally, it would first accumulate, right? Engineer liquidity. It will make a lot of liquidity. And then let's say price was to go long, right? You would see something like this. Price would take out all the liquidity, right, from people who entered the long too early, right? Or were anticipating that price was either going to go long here, here, or here. And that's the reason why I told you I'm not one who's always like keen to taking trade in a range bound market. I don't like trading in the range bound market. Well, going back to what I was saying, to take out all this liquidity here, and then this is the manipulation before it starts to rally back up, causing the distribution. So this is typically what price tends to like to do. You see this happening a lot of times, not once, not twice, but a lot. Price does this a lot. It accumulates, it makes manipulations, and then starts to do what? Distribute upwards. So that is what I am anticipating right here. You also make sure you like, share, and subscribe. It really wouldn't cost you anything. All this is free information, right? You're not necessarily paying or whatnot. But yeah, this right here is what I am anticipating to happen here. Since we are overall in a long trend or in a long-term bullish market, it's been bullish for quite a while. If I am to anticipate more buys, then this is where I'll be anticipating them from. I would expect that price would come and take out all this liquidity here, which is the reason why I drew out this line. So this is like the borderline of all the liquidity that are down here, every single thing, including this one. All of it encompasses this particular liquidity line that is drawn out here. So if I'm expecting price to buy, or if I would want to be seeing any buy movement, I would want price to take out all this liquidity here, tag into or either into one of my points of interest, and then I will start looking for, entries from below here. So yeah, either ways, this is what I'm looking for. The sell from here, which is the counter trend sell, and then the initial overall long-term trend buys. But yeah, like I said, either ways, it's not bad. Well, this is what we are looking at on GBP JPY. Let's check DXY. DXY was my baby as of day before yesterday, and it was one of the main reasons, one of the other confluences, right, that prompted me into entering this GU trade the day before yesterday. Also, this GU was sitting in a very good weekly, I think this was the weekly fair value gap, and also DXY2 was sitting at a good area of rejection, and I started seeing some huge displacements downwards, so I entered, and that is why we got that trade on GBP. And since then it has retraced back up, so for now I will wait. Oh yeah, this was the fair value gap I was using as an initial reaction as to why I took my trade on Euro USD yesterday, but it didn't play out. Like you see, it swept me out. Same rate swept out on the DXY. So let's hope to see some nice movements today. Today I would wait and see if this other block is going to be respected, but then I wouldn't necessarily do anything. I'll just sit on my hands and just wait. But expecting anything to happen right now is not what I would want to do, because there are a lot of disrespected confluences that are just not looking too good in my own opinion. But yeah, let's check GU. Now on GU, I'm starting to like GU these days. I don't really trade GU as much as I do other pairs, but of recent I'm starting to enjoy GU just as much as I enjoy trading Euro USD. But yeah, on the weekly on GU, last week was very bearish. Well, not very bearish, but bearish nonetheless. And we took a buy yesterday, aiming at this other block here that was just above this psychological zone here, one of my psychological zones. I have a couple, but it was just at the area of the psychological zone, and I said there's a possibility price might start reacting from there. So I put my stop loss just around this high and then waited. Now, if we go down to the daily, right, we will start to observe that just immediately after hitting that other block, price started to close back into this range, which was the range of last 2 weeks, and price closed back within the range last week. I mean, yesterday. Which was, sorry, this is the day for yesterday's candle, not last 2 weeks candle. So it hits the point of interest and then closed back in within this range, right? So if I'm going down to the 4 hours, typically I would want to be looking for sells, but if I'm looking for sells on GU, then I would want to be seeing buys on the XY, right? But I do not want to take a misaligning trade, because we all know that once DXY, which is the US dollars, is buying, EU tends to sell, GU tends to sell. So I wouldn't want to take a sell on EU, right? I mean on GU, while EU is selling. So I would want to see some sort of buying pressure before I would want to take sells on GU. So now, if I am anticipating that this what do you call it? This order block right here might get tapped into. Like I said, this is the last leg, right, that I took from. If I am sure about my confluence and my bias from the last 3 days as to why I took a sell from here, then I should still be expecting another sell from here, right? So I can't be expecting a sell from here and then taking sells on GU, except I just want to take a counter trend to and expect that price is going to fill this order block before coming back down. But then, like I said, taking same trades on DXY and GU or EU doesn't make any sense. It's not that it doesn't make it, it is not correct. It is absolutely stupid to do that. So yeah, even if I am to take a counter trend, don't get me wrong, I do not mind the counter trend. There's a possibility I might take it, but it just depends on what I see. And like there are other things, there are other confluences below here that could push price back up. So since I am expecting sells on DXY, then probably I should be looking for buys on GU and just expect that this would be a pullback. If I'm expecting that to be a pullback, then there's no need taking, like I said, I take counter trends, but it's just not wise. It's just not wise to do that. But even if I am to take any counter trend, I will take it from here. And then look for a better zone or a better area to buy from. This is one of the areas I drew out yesterday that I would expect price to come down to before I buy, which is almost similar to the trade I had on EU, which was here. But price just did not want to respect my point of interest and then hit my SL. But if I am looking for something similar today, then it should be something like somewhere around here or somewhere around here. But either ways, it's, if I'm to look for buys, to be somewhere I trust would have a strong hold on price, not just something that I feel should work, but something I know that has strong conviction, which is this. I could get a good buy from here, something like this, and then targets previous highs, 3.5, so not bad. I usually prefer my stop loss hanging, my risk to reward hanging from ratio 3 to ratio 4, 2:5. It just depends, but I prefer it smaller. You get. So since I prefer it smaller, I would want to look for smaller entries. So let's go to the 15 minutes and see if we can see something from there. Almost the same thing. So yeah, this is safer, right? And safer. So yeah, GU buys, but if I am to take a counter trend, I will take it here. If I'm to take it to a counter trend, something like this would be absolutely okay for me. A ratio 4. A ratio 4. This would be absolutely okay for me if I'm to take a counter trend. I mean, if you guys remember, the counter trend we are taking or we are assuming is because of this range here. This one here, the one that got closed into on the daily, if you can remember. This. So if I'm to say, oh, because of the price action of the previous day, right, which is yesterday, and the way it closed back into the range, then this could be a beautiful entry in general for me to want to take from. Is that a fair value gap? Okay, it was. So yeah, on GU, this is what I'm looking at, and this doesn't look too bad. Well, from the looks of it, I'm not sure price would, go back up here too. Well, yeah, we never know what could happen, so let's just watch. This looks like something that could hit before this hits. So if this triggers, then I would not be looking for, the only way I would be looking for this trade if this triggers is if price comes down here and invalidates this other block or invalidates these points of interest, right? Entirely, like totally breaks it. Then when it comes back up here, then I could look for something above there to enter from. But yeah, this looks like the current bias as of now. We're having a bullish bias. Just like yesterday, just like day before yesterday. You go. But yeah. BTC did me dirty yesterday. After this initial trade, yeah. After this initial entry here, I was expecting it to come and take this high. But around, say, was it 2 a.m., 3 a.m. this morning, price started rallying back down. And then I'm back at entry. Which is typically not a bad look for it. Like the previous 2 hours candle closed bullish, and the current 4 hours candle is looking like it might close bullish also. But like I said, it's not a bad look. I would have loved to take a re-entry on BTC, right, from where it's at right now. But then there wasn't any significant break of structures either this one or this one that I would consider to be a reason as to why I would want to, retake this buy. It looks, oh, I'm out of this trade already. It hits break even. There's a rule I have where once it gets to either ratio 2 or ratio 3, I would completely take my trade to break even, which is what I did here. It was about 2. It was about ratio 2 yesterday. I woke up and saw it and I was like, you know what? Break even, we shall go. And I put my stop loss back at break even. So this was a break even trade. I'm already out of it. I've been avoiding BTC for the longest of time. I think for a couple of weeks we had been avoiding BTC, especially due to all this that it was doing here. I decided I wasn't going to trade BTC for a while, but the reason why I took the trade I took yesterday was because it seemed like it had broken out, and the previous 4 hours candle is very bearish, so I don't think I would want to be indulging in any buys for now. I'll just leave BTC to do its thing. I don't want to be part of that. So yeah, let's just watch and observe and see what it's doing. But for now, I do not have any. Let me call someone. I think he should have some entries he might want to. I think that will be all for now. I've set alerts on the ones I feel I would want to come back to, and once they hit, I will be back and I'll do I'll do a trade analysis, in trade analysis or whatever particular trade gets hit. Well, until then, catch you all later, I guess.